Good morning. This is Larry McMillan with a market update on Monday, October 12th, before the market opens. Well, last week S&P managed to break out over 3430, and that was positive. And many of the other indicators have swung around to the positive side as well. So that bottom that was formed a couple of weeks ago on what I thought was just a minor oversold condition is actually proven to be quite sustainable. The fact that we don't really have, we did not have buy signals at that point is a little bit concerning, but we're not really going to bother with that right now. The chart is positive, the S&P. The next target is the all-time highs at 3588. And unless it falls back below 3400, that's going to continue to be the case. The equity-only put-call ratios have rolled over, and that would normally mean they're canceling out their recent sell signals. And I say normally because to the naked eye they've done that, but the computer analysis programs are still holding on to the fact that these are sell signals, and that's because they are so low on their charts. There's still a lot of call buying going on. So while we have this temporary rally in place, we're going to view it with some caution, or perhaps like the one in February that went to new all-time highs and then collapsed later on. Breadth has been spectacularly good. Breadth has been the leader. It did give us a buy signal a couple of weeks ago. The breadth oscillators are moving into deeply overbought territory now, which is good on an SPX breakout to a new upward leg. So that's all positive. Cumulative breadth is also positive. We look at cumulative advanced decline volume. In other words, the volume on advancing issues minus the volume on declining issues each day. That has gone to a new all-time high. And every time that happened, now that I've said every time, it won't happen this time, but every time that's happened so far in the last 20 years anyways, S&P has followed by going to a new all-time high as well. So that's a very bullish indicator right there. VIX is sort of still in a world of its own. It's trending lower, and by our definition of trend, it is in a downtrend, and that is bullish for stocks. But it's still at a very high level, of course, because of the post-election worries, and we're not really interpreting VIX in its traditional sense. I mean, on many days, the market's up and VIX is up too, or the market's down and VIX is down as well. So VIX is struggling with its own demons there in terms of expensive options after expiration. As far as those things go, the November VIX futures are still trading higher than the October VIX futures, which means that traders are expecting volatility post-election to last almost till Christmas. Before something is decided, and who knows, maybe it will even go up farther than that. So in summary, we're bullish right now on the short term. We've closed out the shorts, gone long in line with this breakout over 3430. I invite you to visit our website. We published two very interesting articles on Friday in the Option Strategist newsletter. One went over a number of indicators that are different, a little bit different anyways, in terms of presidential election cycle. And then another one is a description of this cumulative volume breadth and how its track record has been very good at predicting new all-time highs. We also have our Saturday seminars coming up. The next one is on October 24th, when we're going to talk about volatility trading. So visit the website. And otherwise, good trading and good luck.